learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on October 1st, 2020, and the stock market is confused. We had the debate yesterday. We were waiting for Wall Street to tell us something and how the market played out since then, today, and then how it even closed. It is showing us a lot of weird things, a lot of developments. The month has finally ended, and September was a real doozy. I really believe that's the proper context of the word because September has been crazy all around. We've seen a lot of weird pricing, the volatility, the weird movements in asset classes, and again, even after the election, it is clear that some of that stuff remains. So I have a lot to talk about today. We want to go over what happened in the market today, what we're looking at the rest of the week, and even some of these broader implications. And we're going to talk about the election as far as, Wall Street and what they're looking at, because today there was kind of a turn that was taking, and in my opinion, it seems like it's going to be clear what the dagger or the opportunity wind will be for the market. So I hope you guys are ready. I got the plays, got the keys, all of that good stuff. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you subscribe. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life. And yes, since somebody called me out on what I was going to use at this part of the video on stream, we have the fastest stock market news in the world. Shout out DDOG, 1000%. And the most important thing you need to do, post or watch this below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So right off the bat, first thing is a lot of things happened today at the end of the month, and it really seemed like a lot of things were converging at once. And now with October about to kick off, we have to keep that in mind. So a few different things, even after hours. I think this is kind of helping push the market up after hours. There was the voting on the stopgap funding deal. So that's if we didn't have that whole budget issue and all that, the government shutdown. You hear about it every so often. That is at least avoidable. It looks like the Senate has passed it to stop that. But now there's going to be more talks back and forth with the stimulus. You have the stress test. And now today we are expecting stuff from the bank. I told you guys I would have this information after hours. We did get it from the Fed. It was not the stress test. It was the updates on the bank. So we got the update today after hours that the banks and the Fed are going to keep the policy they had in place. So pretty much bank stocks can only pay a dividend based on how much money they make. It's based on the income, and then they've halted all buybacks on certain size bank companies. So to my surprise, the banks didn't really move off that. So it was a smaller move. However, now a lot of people are talking about the stress test, this second round. We don't know when that's going to be, but it seems like that may be the justification to remove some of these limits. So they're going to do the second round of stress tests, and they could use that to even halt dividends fully and buybacks, or some of the banks might have that as an opportunity to continue. So it's developing slowly. We will see how that plays out tomorrow. But again, that's happening right now. Then a lot of the moratoriums on evictions, all the way down to even like stuff like the bank dividends. A lot of different things are expiring today. Again, even the budget. So this is an interesting time of the month. And even on a debt cycle wise, you're about to see a lot of debt have to be due soon. But now you mix in the election, all of this is happening. So now today was a very, very interesting day. And even to the title of this video, why is the stock market confused? Because like we said, we were waiting after the first debate to see what Wall Street's reaction to everything was. We get to kind of see what they were pricing. And now we're down 300 points on the futures. We gapped down, then all of a sudden we shot up. So with the market gapping down, it was like, okay, maybe Biden did take a lead and the market didn't like that because that's how it's been reacting. But then the fact that it started shooting up, nobody really knows now because it's like we don't really know where Wall Street stands. And a lot of today was based off of stimulus news. So all day we had news that Munchkin was going to go meet with Pelosi. Then they said that they were hopeful. It was going good. And then all of a sudden, if you guys are watching on streams, we broke this news very early. We started to get it. We were inferring from it. McConnell started saying stuff. He started saying that they're very, very far apart. Then Trump started tweeting. Then there was a press conference with Schumer, and then they brought up the ACA, the Affordable Cares Act, and this is what I talked about with the political issue. We'll bring that up, but then eventually it got confirmed that they weren't going to do a deal. They said they're going to take it to the House to vote on it tonight. Then they said they're not going to do it. So even after hours, this is part of why I think the market's going up here too. They said they want to talk a little bit more. So it is very, very confusing. It's getting interesting, but this is where we started to see the market move. So now it's really difficult to tell what the market really felt about everything. So now let me even show you something else with even more uncertainty. This is what I've been talking about. This is a great infographic to show it, where the implied volatility is showing that extreme election uncertainty. So let me hop back to the keys. Nobody knew what Wall Street felt about this debate, and the debate made that clear. Even a lot of people on both sides said the debate was just, it was pretty weird. It was honestly weird. Everybody was pretty disappointed, and the ratings were even very, very low, but the market is pricing in a longer election due to this nature, this uncertainty. Again, even some of the moves that were implemented today. Now that's what this infographic shows, because what do I mean by a longer election? If you're saying there's going to be a contested election, now there's dates, it's pretty much pricing all the way out to the inauguration. So this is very, very unique. Again, it could be for factors of the Fed, uncertainty. Again, it could be both the election, or with everything going on, spreads may be undoubtedly raised. So now with that, we start coming at the assets. Oil is starting to look confused in the fact that it's just staying pinned. It's not moving. You saw the dollar starting to kind of do that same thing. It was doing that before, but now especially TLT, even though they gapped down and it looks like that trend was changing, that end of the day run up was enough to just bring it back to normal. So it's clear that we didn't really get much from not only the debate, but everything. Now the market still needs stuff, and it seems like that stimulus alongside other things will be important. However, as far as the rest of the week, we are going to get that jobs report. I would wait for that. However, I would watch for further developments in the politics, because it's honestly looking like it's going to be a giant game of chicken, and that is what is going to either turn the market sour, or that sweet, sweet stimmy will give the market what it needs. And it looks like the longer this draws out, the more reliant the market will be on that. But now there's a lot of that partisanship, that SCOTUS. Everything today was just very, very weird, because again, it's rolling in everything we saw yesterday with the debate, the last few weeks. Again, we got a little bit more from the Fed today, but we got the Fed last week. So you're not seeing a lot of stuff move, but now we're entering in the new month. This should be exciting. It's the end of the year. I hope you guys are ready, but that is pretty much it. So let us get into the plays. So right off the bat, we made a lot of plays. This one, I only have shares, and I will say it, it's not going down. I keep talking about this, but I think it's going to go crazy. If this doesn't stop, I only have my 50 shares in the long term. I don't know. I only got those puts because I was like, okay, if some of the sports stuff could bring it down. Otherwise, DraftKings is starting to really, really look like a Zoom type company. So I like it. The options are expensive. I might even just sell premium on it, sell puts, and then ride our shares. And then hopefully in a few months, maybe a year, it comes down and we could scoop some up. But that has definitely caught my attention. Shout out. I'm blanking on the name. He was in the chat. He helped it out. He was posting that McConnell news and everything. He was on top of it. He was looking out for the leaders today. That is going to be very, very important. Watch out for the leaders, and DraftKings is one of those names. So there was that. That's the first play I'd say to look at. Actually, let's jump back over here, because DraftKings looks like DDOG. This was one of the bigger plays that we made today. I did do a bunch of credit spreads, but now this one might be a continuation. We sold out of it. We did about 1,000% on this one. In about 30 minutes, we got these 5 DDOG contracts, and we got the news. If you guys watch the stream, go on at 11 a.m. This one, the news didn't even drop on like CNBC or anywhere official. What happened, it was the high-low ticker. It started printing. We used the snaking the chain video. If you're not familiar, that video is called How I Beat the Market Makers. Search that with the trading fraternity. But we used that, got 5 of these at 30 cents. We executed the same strategy. I made them free, and I was even skeptical because it was a little bit slower. And again, again, we didn't hear about the deal, but they had a deal with Microsoft that they're partnering up. Got my initial investment back up. It kept shooting. Sold. I had 2 remaining. Sold one at $1.15. Sold the last one at $3. But $30 into 300 in about 31 minutes. It was a very, very good play, but this might have continuation. I like it, but I'm going to wait for my double dip. Again, this was a big move, and it finally had that juice that we were talking about. So keep that in mind. And then this is an example of making it free. People often ask, well, how do you make it free? We bought 5 contracts for 30 cents. That's $150. Within 8 minutes, it shot up. I was able now to sell back 3 of the 5 contracts for more than what I spent total, got my initial investment back, and now I got to hold 2 contracts for free. So that was the first play. Now back to the rest. Again, everything I will be looking at, you're going to see it through the other plays. I will say credit spreads again, and this might change here by the end of this week, or we'll see how we come into next week, because if we start to get any of this movement, that is going to be the key. Because the credit spreads are working until the market starts to move now. And pretty much at any moment, there could really be a rug pull, or there's going to be just a crack injection to make the markets go crazy. So I know we've been talking about this, but be a little cautious as we see this moving forward. But I'll go over all those plays. As far as the other plays, watch Snap. Earnings is around the corner, but they are at a key level. So even then, these two are bullish. And I like kind of that, because I'm paying attention to the leaders and the stocks that have kind of just been doing their own thing. So I kind of like that. Again, we have shares. I even still have that 100 contracts for October. Those are down because Snapchat's been slowing down. Again, the IV's been a little bit weird, but watch out for them. And then finally, when we get into the credit spreads, I've been talking about this, whether even if it is bullish, a McDonald's call spread, it's been holding up pretty decent, but they kind of seem like they're doing what the market's doing at a softer level. So I think even if the market goes up or down, I think it could go up a little bit, but not too much. But we talked about this, and I'll be looking at those. So those are going to be the plays that I'm watching. As far as the ones we made today, we made a lot of credit spreads. So remember, these are the 2 credit spreads we were holding. Here was the Nike. I was up a lot more money. I didn't take it, and then when all of the markets started dropping back, it was there. But I'm at 50%. I should be getting ready to take this, but I'm being a little bit greedy on that one. So pay attention to if you take at 50% or not. There's the Nike. Then there's the Boeing. This one, I was down on it this morning again, and then it kind of held up because Boeing did good, and then eventually by the end of the day, we're slightly up on it. So again, pay attention to how these are aging. And then new plays, I did a Qualcomm play. This one was a little bit all over the place, but we shorted the Qualcomm calls. So I sold 10 of the 123s, bought 10 of the 127s, got 60 cents credit as long as by next week Qualcomm stays below 123. I will get to collect the $600 premium, or if it drops faster before then, we could take that profit. So that was the first credit spread I did in the morning. And then second credit spread, I did CRM. This one's a little bit all over the place. You could even see the bid and the ask. That's what made it a little bit more difficult, but I did the same thing, but I shorted the puts. They got news that they have some like contact tracing thing. So I wanted to play it, but I didn't think it had enough juice. That's why I was like, well, sell the premium, sell the puts. So by selling the puts now, I was expecting it to go up. Qualcomm, I sold the calls. I don't want Qualcomm to go up because I shorted the calls. So in this case, this is a credit spread on the puts. I want this stock to go up. So I shorted the 237 put, bought the 225s, collected $1 per contract on 5 contracts of credit. I want this 237 put to expire worthless by October 9th. How is that going to happen? If the stock stays above 237.50. So again, same strategy as the other ones on taking profits, or if it's 50%. That was the second one. And then finally, at the top of the day, we were getting that McConnell news. We started to see it happen and kind of what was going on with the stimulus. I made a day trade, and you'll notice most of the other trades we've made this week are all have time. I did a weekly to kind of day trade. I didn't know how much juice would be in the market, so instead of buying the contracts, I sold the premium. So in this case now, I sold by the end of Friday. I shorted the 344 contracts and then bought the 348. So shorting a call credit spread, I'm saying that the stock won't go above 348. How do I make money? Is if the SPY closes lower than, 334, not 348. The first one. On the call side, it's the closer one. It's always the more expensive one on the credit spread. So the 344. So I'm saying by Friday, the market won't go above 344. As long as it stays below there, we collect the premium. So I sold 20 at 27 cents, collected 540. But you saw it's a weekly contract. The market started dropping. It was at 337. It closed at like 334. it really, really plummeted. I'm even up 50%. So I was going to take it there. I could. I probably should. But I think the odds are a little bit more in my favor because that would be a pretty big move. But we'll see. And tomorrow could even help solidify that. But those were the 3 credit spread plays we made. Got clapped on shares. And mainly it was some of these EEMs and bigger put positions. They didn't go up today considering what happened with the whole sell-off in the morning and then now the move up and then that end of the day sell-off. So very, very interesting. But those were the main plays. Those are all the plays that we did today. As far as everything else, watch those Nikes that were in the Snapchat, Boeing. Again, these are all the plays that we made. Then, I forgot we did a PLTR and ASAN IPO. And I'm actually going to play these ones just like we did Snow. And Snow ended up coming up today, and then it ended up dropping, but it hit our break even. It fell. I'm still holding that. Like I said, we did this as the IPO experiment, but I'm putting in an amount, I'm comfortable holding because pretty much they're going to be volatile. You don't know what's going to happen. I don't want to buy these and then sell out at a loss. So pretty much I'm buying them. I'm going to look to take profit when I can make shares free. So if I could sell my initial investment back and walk away with some profit in shares, I will be able. That's what my main goal is. Otherwise, I'm just going to hold it. Yes, even if it goes down. So I bought these PLTR shares. We lost $100. I bought 200 at 10:40 in the morning. Again, you would think we lost a lot, but every 100 shares, you're going to lose $100. So if it's a $9 stock, if it goes up to 11, you made 200, it goes down, you lose 200. So on 200 shares, it's $200 per. But that was the first one. And then we also grabbed the ASAN ones. I grabbed 100 of those shares. I'm actually up on that. I did not even realize that. But I grabbed 100 of these at $29 flat. It's doing pretty good. You see $176. So what I'd like to do is, like, let's say I could get 30%, 50%. I would just sell back my initial investment, get $2,900, and then hold the rest in shares. That would be the exit plan. So going to be riding those out. I'd watch those two again in general. I'd even watch Snowflake with how it held up. That was interesting. Then watch the vaccine stocks. It's been very, very difficult to play, and some of those shares have been pretty interesting. But Myrna had some back and forth drama, back and forth vaccine news today. AstraZeneca got some after hours as well too. But it is very interesting how some of these are all starting to trade if you really put it in a perspective. But watch those. And then finally, HD and McDonald's. I think these could be good credit spreads. And again, if things start to shift, they could be good as well. I really like the McDonald's, so I'm going to keep my eye on that. And then finally, we already talked about TLT and UUP. Wait for it to do something and wait for it to snitch. A lot of people thought it kind of was today, but it's still staying in the range. Again, you have to let it break out. Anytime you see these daily charts on some of these, it's just not moving. You draw the line there. It's clear what the market's thinking. Why is it moving up or down? That's just spread realistically. So it's very interesting going on. Pay attention to that. Pay attention to global events. Balance the budgets. You only got 2 months of real big action, babies. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to focus on building, baby. Process is in doing it. You learn to build by building and failing. So get ready, stay focused, and do not quit, especially these last 2 months. But the cult loves you. I love you. I'm going to see you in the morning. Let's go.